All right, let's just dive straight into it. Today, this explainer is looking at NuScale Power. They trade on the New York Stock Exchange under what might be the most fitting ticker symbol ever, SMR. We're going to unpack the incredible promise and honestly the very real perils of this pre-revenue energy company. We're talking about a business sitting right at the absolute bleeding edge of nuclear innovation, but they were also facing all the classic growing pains of a massive infrastructure startup.
Now, to really wrap our heads around the massive market opportunity here, we first got to ask ourselves kind of a fundamental question. How exactly does the world plan to generate the immense amount of electricity needed for this booming AI data center industry? I mean, think about it. The chips in our phones and laptops are getting faster, the AI models we play with are getting way smarter, but they literally require a staggering amount of electricity to run. Big tech is hitting a very real physical limit on the power grid right now.
So here's our game plan for today. We'll look at the broader SMR revolution, dive into NuScale's specific tech edge, confront their financial reality, weigh the overall investment thesis, and finally, check out the risks and their rivals. Let's get to it. Okay, Section 1. The SMR revolution. Let's look at why the macro environment is setting the perfect stage for alternative nuclear energy. Here's the crucial point. Big tech's massive AI expansion demands 24/7, carbon-free baseload power. And you know, data centers, they don't just go to sleep when the sun goes down or the wind stops blowing. So while traditional renewables like solar and wind are fantastic, their intermittency means they simply aren't enough on their own for this kind of relentless demand. It creates a scenario where scalable, safe nuclear solutions go from being just a futuristic luxury to an absolute, immediate necessity.
Moving to Section 2, NuScale's tech edge. Let's pivot to NuScale specifically and explore the actual engineering that sets them apart. Before we get too deep into the weeds, let's quickly clarify what an SMR actually is. It stands for Small Modular Reactor. So unlike traditional massive nuclear plants that are custom-built on-site over, say, a decade, an SMR is incredibly compact. It's literally designed to be manufactured in a factory setting, think assembly line efficiency, and then transported and assembled safely right on-site. It gives you highly flexible power generation. So how does NuScale actually pull off this modularity? Well, their flagship product is called the Voyager power plant, and it's engineered to scale up just like building blocks. Each individual module cranks out 77 megawatts of electricity, and depending on what the customer actually needs, maybe it's powering a remote industrial site, or maybe it's a massive hyperscale data center, they can just configure these into 4, 6, or 12 module layouts. A 12-module setup, that gives you an impressive 924 megawatts, totally rivaling traditional power plants, but with infinitely more flexibility. The technological foundation they've gone with is actually fascinating. The bull case heavily emphasizes their reliability. So instead of trying to reinvent the wheel with some experimental physics, NuScale's design relies on proven pressurized water reactor, or PWR, technology. This is the exact same basic tech that's already used safely in over 300 existing large reactors worldwide. Plus, they use standard low-enriched uranium, completely dodging the headache of those hard-to-source, highly specialized fuels that a lot of their next-gen competitors need. Add to that a really remarkable passive safety system that cools the reactor during emergencies entirely on its own. No external power, no extra water, no human intervention needed, and you've got a seriously compelling engineering pitch. All right, Section 3, the financial reality. Let's step away from the engineering blueprints for a second and confront the very stark financial reality of the company. As of the second quarter of 2026, NuScale is sitting on a massive war chest. $1.9 billion in cash equivalents, and short-term investments. That is a $900 million jump from just the prior quarter. This basically gives them a fortress balance sheet with absolutely zero debt. And you know, for a pre-revenue startup where cash burn is usually an existential threat, having $1.9 billion, that's the lifeblood. It's what allows them to survive these notoriously long, grueling development and regulatory cycles.
But that massive cash reserve sits in pretty jarring contrast to their actual revenue. In Q2 2026, it plummeted to a mere $75,000. I mean, why so low, right? Well, this reflects a temporary gap right after they finished the Phase 2 engineering design for a project in Romania back in late 2025. It's a bit of a harsh reminder that, despite billions in the bank, this is still very much a pre-revenue startup, just waiting for commercialization to officially kick in.
Looking at their current financial flow paints a really interesting picture. In Q2 2026, they posted a $50.1 million net loss, which makes sense. It's driven by heavy R&D, commercialization expenses, and just general overhead. But look at the flip side. Because they have that $1.9 billion cash pile just sitting there, it actually generated nearly $13.9 million in interest income in a single quarter. That interest is acting as a crucial cushion, really softening the blow of their operational cash burn as they scramble to finally get steel in the ground.
Moving on to Section 4, the investment thesis. With those financials in the background, let's explore the core investment thesis here.
The ultimate bull versus bear argument really boils down to this one comparison. On one side, optimists point to a massive regulatory moat. NuScale is literally the first and only SMR company to get standard design approval from the U.S. Nuclear Regulatory Commission. That is a process that costs hundreds of millions of dollars and takes years, meaning they've already crossed the hardest regulatory finish line. But on the other side, pessimists are quick to highlight severe execution risk. Remember their major carbon-free power project in Utah? It completely collapsed in 2023. Why? Because inflation and interest rates drove the projected power costs up to a totally unviable $89 per megawatt hour. The reality is, if you can't prove favorable economics to your end customer, all the cool tech in the world isn't going to save the project.
To try and mitigate those execution risks, NuScale definitely isn't flying solo. They've assembled a really heavy-hitting network of global partnerships. They're working with Entra1 Energy as their exclusive global commercialization partner, and they're actually in talks with the Tennessee Valley Authority right now. Over in Europe, they're pushing ahead with RoPower on a 6-module plant at a former coal site in Romania, which is getting super close to its final investment decision. On the manufacturing side, Doosan Enerbility has already been forging the large reactor parts for the last 2 years. And finally, Fluor Corporation is still in the picture as a massive anchor. They've been a major investor and the primary engineering partner since way back in 2011.
All right, our final section, risks and rivals. Let's take a look at the competitive landscape to see exactly who is trying to eat NuScale's lunch.
When we look at the rivals, it is a fierce battlefield full of incredibly deep pockets. You've got TerraPower, which is backed by Bill Gates, pushing their advanced natrium fast reactors. There's X-Energy, which just locked in massive investments from Amazon and a partnership with Dow. Oklo has the backing of OpenAI's Sam Altman. But honestly, the most immediate threat might be the legacy heavyweight GE Hitachi. Their BWRX-300 reactor currently has the ultimate market advantage. They are literally already pouring concrete and doing actual construction in Ontario, Canada. That gives them a massive head start on physical deployment.
You also have to add this competitive pressure to the reality of their stock valuation. Because NuScale lacks meaningful current revenue, market analysts are warning that the stock carries a really high valuation risk. The current share price is almost entirely based on projected earnings from the year 2030 and beyond. So if you're thinking about adding this to your portfolio, you have to brace yourself for extreme volatility. Literally any news of a project delay, a supply chain hiccup, or a cost overrun is going to violently swing the stock price, just like we saw with that Utah cancellation.
So as we wrap up this explainer, the entire investment thesis for NuScale really hinges on one critical, pretty provocative question. Will NuScale's unprecedented multi-year regulatory head start and that $1.9 billion fortress balance sheet actually be enough to cross the commercial finish line first? Or are the tech-backed billionaires and massive legacy conglomerates going to beat them to actual revenue-generating power production? It's a totally high-stakes race, and it is quite literally going to shape the future of global energy. Keep an eye on those final investment decisions. They're going to tell us everything we need to know.